I'm thrilled to have a great guest with me today to talk about the future of digital currencies. Katrin Tinn is an assistant professor of finance at McGill University's Desautels Faculty of Management, where she focuses on applied theory in financial economics and information economics. In 2020, the Bank of Canada launched the Model X Challenge, which invited experts to propose a design for a Canadian central bank digital currency. Out of 20 submissions from teams across North America, the McGill proposal, including Tinn and Christophe Dubac, an associate professor in McGill's Department of Electrical and Computer Engineering, was selected as one of 3 to receive additional funding from the bank for further research. I'm excited to be talking to Katrin about the McGill proposal and some of her research into digital currencies today. To start with, congratulations on your proposal being accepted in the top 3, Katrin. That's a wonderful achievement.
Thank you.
A lot of people have heard about central bank digital currencies, but may not understand how they work. Before we discuss your proposal, let's talk about digital currency in general. Privacy is a key issue driving the Bank of Canada and other central banks to look into digital currencies. Can you give us some context around the issue of privacy and currencies?
Yeah, absolutely. So, as you said, Bank of Canada and other central banks like the European Central Bank, when they are thinking of the central bank digital currency designs, there are, of course, many choices. But for this type of central banks, like the issue of privacy and the possible trade-off between privacy and compliance with, for example, anti-money laundering regulation is really in the center. And one thing regarding privacy is exactly the fact that physical cash is very private, because like what is validating the transaction is a validity of the banknote itself, but nobody knows exposed like who exactly spent this note. Now things are very different when we are thinking of credit card payments or payments using the tools provided by technology firms, because this is kind of a version of account money where what validates the transaction is knowing like who makes it and who receives it. And of course, like in this environment, one would worry that anybody's purchasing decisions, for example, if they buy alcohol, if they buy medicine, if they consume entertainment, could somehow negatively affect, for example, their bank loans or their ability to get insurance and so on. And this question is even more interesting because it doesn't need to be this sort of goods that somebody might think that, okay, I'm not consuming of any of this. I have a very nice consumption profile, so I would not be affected by it. But it's not really true, because research has also shown that little things like whether you buy things using an iPhone versus Android-based phone like Samsung or something can affect your credit worthiness, or like when you buy things. Do you do it in the afternoon or do you do it in the late evening? So there are this lot of consumption choices that people are making where it could have unintended dangerous consequences if they can't make the purchasing choices privately.
Right, so we've moved from a world where cash transactions are totally private. The government or the banks don't know what you're doing with your money, to digital payments where the banks knew what you're doing with your money, and now a world where the big tech companies know what we're doing with our money and how we're spending. And so this evolution in the loss of privacy in our transactions. This is of concern to the Bank of Canada and the way it's looking at the central bank digital currency issue?
So it is a concern for like economists and people in finance, as well as, of course, like to the central banks, because exactly the thinking has evolved around central banks digital currency from what is called wholesale central bank digital currency, where the main purpose would be to facilitate the interaction just between the central bank and financial institutions, to retail CBDC, which is effectively aiming to be a replacement for cash in some form. So that is that was the thinking of Bank of Canada at the time of their call.
Right. Okay. So that having a better view on retail transactions is an issue that the central bank is perhaps interested in.
Yes, the central bank is interested in the fact that the usage of physical cash is decreasing because people are increasingly using various already existing digital means of payments. And the interest in central bank's digital currency, like for me as an academic, is like why would it be better? But for them is also the question of remaining relevant as a central bank and in control of monetary policy.
Okay, so that you've just introduced quite a big concept here. That central banks potentially losing control of monetary policy with the way digital currencies have evolved. Could you speak a little bit more, go a little further on that question? What is at stake here for central banks in terms of monetary policy?
Yeah, so I mean, like traditionally, like of course there is money being created also via the financial system, but the central banks have all the time been at least in control of the high-powered money supply, like cash and so on. And I think that when you read like the discussions by the central banks, like one worry is here exactly that with the prevalence of other means of payments, including cryptocurrencies, like the ability for them to control monetary policy via controlling cash and aggregates like that is a question mark. So that's why maybe central banks are considering it as like Bank of Canada explicitly considers the central bank's digital currency as a contingency plan. And this is one of the arguments that they are emphasizing.
Right, right. So what other factors are driving central banks to look at this world and sort of encouraging them to move a little faster, perhaps? Are there other issues at stake for them?
So I think that like definitely the initiatives like the cryptocurrencies, which at this very moment are still not something that are endangering the monetary systems in any means because they are not used for normal transactions in a wide scale. Like it's pretty much nobody who is buying coffee for it. Of course, there are funny stories about somebody in early days of Bitcoin buying pizzas for Bitcoin for extraordinary amount of money in nowadays. But overall, like it is not something that is regularly used for transactions. But then in addition to that, there are institutions like Facebook that are thinking of issuing digital currencies in different form, and all these developments are probably behind also central banks increasingly thinking about CBDC.
Right. So for Facebook's Diem, or what was Libra, now Diem project, in part addresses that issue of the ease of transacting in a digital currency. Is that fair to say? And whereas it's hard to buy things using Bitcoin, Facebook's goal is to make it much easier to transact with a digital currency, perhaps.
Yeah, exactly. And of course, like firm like Facebook, it's very different from a country. On one hand, it is not so specific to one country, but it has users and really many of them all over the world. So if for whatever reason, like Diem would become a popular currency, it would be potentially bigger than any country, even bigger than biggest countries like United States.
So one of the issues I think that makes currencies like Bitcoin, for instance, very difficult to use as either a store of value or for day-to-day transactions is the fact that it varies in price so much from one day to the next. The volatility in trading of Bitcoin is quite large. How would a central bank digital currency help or change that or improve that for digital currency markets?
So the main difference between Bitcoin and the central bank's digital currency it is officially issued by central banks. So it comes with guarantees that it is always convertible, for example, to the physical version of Canadian dollar, for example. And it can also be made a legal tender telling that the firms have to accept digital currency as a means of payment, while at the same time, it is absolutely voluntary whether any firm accepts Bitcoin as a means of payment. And to a degree, it is also the case for stable coins. So these are the digital currencies that aim to be linked to, let's say, US dollar or Canadian dollar. And hence they would not necessarily have volatility, but there would still not be a guarantee that the firms would need to accept it as a means of payment. So that is this uncertainty about whether Bitcoin is accepted or not is probably one of the reasons behind its volatility. Of course, it has other issues regarding the cost of recording transactions.
Right. Recording transactions in Bitcoin on the Bitcoin blockchain is still time consuming and costly, right?
Exactly, because it's especially in the case of Bitcoin, it is based on proof of work, which kind of uses a lot of computer power to validate transactions. It takes time, and in a larger scale, that doesn't look very sustainable. Of course, there are also a lot of thinking in this crypto world and how to make transactions faster, alternative validation systems like proof of stake and so on. So there is a lot of thinking also in the kind of crypto world that how to make these things less costly and faster, but it's definitely one of the issues. It's very difficult to have simultaneously this degree of decentralization as well as speed and efficiency.
Interesting, right. Decentralization and speed and efficiency kind of pull in opposite directions. Conceptually, it's hard to reconcile the two.
Yeah.
So some of the contention for central bank issued digital currencies is that they can help improve financial inclusiveness. Can you speak to that idea?
Yes, because I mean, this issue varies, of course, across countries. So in many countries, there are people that do not have access to bank services. They don't even have access to the means of payments, which has been behind a lot of developments that are exciting in the fintech world, starting from M-Pesa up to the digital currencies and so on. And even in countries like Canada, even so most people are included in financial systems, there are still people that are not included. So one important aspects that the central banks are considering is that it definitely needs to be possible to use for everybody, even by those individuals that don't have a normal bank account, which is not many, but there is still a substantial and surprisingly big number in countries like Canada.
Right. So reduce the cost of banking to make it accessible to everyone.
Yeah, at least like there was a basic system of means of payment. And this is also very important exactly in the context where the cash usage is going down. So when pretty much everybody was using cash, it's not that much of a problem. But if only few people would still like to use cash while everybody else is using the bank cards, and maybe the firms don't want to deal with the cash because it is costly and can become, again, a bigger problem over time.
Right, right. The demise of cash requires an improved means of exchange, a low-cost means of exchange to keep it available to everybody at the end of the day. Interesting. I want to come back to there's one issue coming back to the privacy question that I don't think we spent much time on, and I'd like to come back to it. In your proposal specifically, one of the defining characteristics of it is the notion of asymmetric privacy. And so this notion that where cash was completely private, both sides of the transaction were private. There was no record necessarily of the payer or the receiver. In your proposal for Canada's central bank digital currency, the payer would remain anonymous, but the receiver would be recorded and tracked by the central bank. Can you explain why your proposal is structured that way?
Yeah, so the key issue here is that the central banks want to balance as a trade-off between privacy as well as compliance with anti-money laundering regulation and so on. Of course, like cash has been used for this sort of purposes for a long time, but like when we have financial innovation, why to continue like that? So this is one aspect. Second, as we argue in our proposal, there are very little reasons to keep the money received private, because most money received is anyway liable to taxation. So in fact, like we can improve tax collection, and perhaps that can make taxes lower and so on. So firms and individuals that operate legally don't really lose anything from having money received being private. So one justification for our proposal is exactly like that you achieve better compliance with regulation, as well as there is little loss while having this part of the transactions less private. Now, furthermore, when we have digital records, what is interesting for me in finance is like, why to waste this information? Because based on having the money received being recorded somewhere, we can offer better financial contracts. We can have better financing for firms and individuals, because in a traditional world, when both sides are symmetrically private, it actually makes financing more costly, because the firms need to voluntarily disclose what they have earned, and we need to spend money on auditing and checking whether the records are great. That leads to typical debt contracts, which are good in terms of minimizing monitoring and auditing costs, but come with other negatives. So it's a combination of all these things that there is benefits of keeping privacy of spending for many reasons, but with money received, there is less to lose and a lot to gain by making it a bit less private.
So when you think about if Canada's, the Bank of Canada is going to issue a currency, a digital currency, what are I'm just trying to synthesize what the attractions are to users of the currency, the spenders, to receivers of the currency, to attract them to want to use it and to adopt it. And if I've understood what you've said correctly, the attraction for users is it remains private. They're not giving their information over to, certainly, no longer giving their information on consumption habits to their bank, which Canadians generally have been comfortable with. But more importantly, they're not going to give their information to the Apples and Googles of the world through the current digital payment methods that we have started to use very much so since the pandemic. So there's an attraction as a user of cash, a user of currency to want to use it. On the flip side, for receivers, it's legal tender, therefore it's it has to be acceptable in all institutions. So that's sort of more of the stick than the carrot way of imposing its use. But it is also stabilized by the foundations of the same Canadian dollar that we all use. So the volatility issue is dealt with compared to accepting other digital currencies, perhaps. But finally, the point you just made is a really interesting one, because I think that drives adoption from the receiver's end, which is if it reduces the cost of financing to the receiver because it simplifies contracts for their financing, that's a big incentive for receivers of cash to want to use a new digital currency. Is that?
Yeah, absolutely. Like, I mean, imagine firms that is normally struggling to get financing. maybe it is a producer of an innovative good, for example, but like if the firm can more credibly say that, I'm accepting payments mainly in the digital currency, hence like you can validate what I'm earning. You can ask for a very sort of contracts that are more maybe equity-like and perhaps even better than equity, coming with some form of insurance that when things go badly, you don't sell a lot and you pay back less to your investors, versus when you are earning a lot of revenues, you can offer them to get a bigger proportion, which from ex-ante perspective, when you don't know whether you are doing badly or well, can be extremely valuable. I mean, and similar also for individuals. Imagine a student loan, for example. Again, like students, they're all talented when they are in universities, but some of them end up earning a lot of money, some of them less so. So why not have like a student loan scheme that is reacting to the students' future income, such that if they earn less, they are unlucky in the job market, they also need to pay back less, and if they earn a lot, they pay back more. So for many firms and individuals, like having this reliable records of transactions can make many forms of raising financing a lot easier. Now, of course, because one of the benefits of the central bank's currency is the fact that it is always convertible to physical currency, as well as adoption is voluntary. These benefits are initially a bit smaller because we don't know that all transactions are recorded like that. But hopefully in the combination with privacy and the benefits, if it is then more widely adopted, these benefits start becoming more important. Yeah.
Well, and your example of student loans brings us into the whole area of social programs more broadly. From if I can say, from monetary policy, which was a concern at the front end of our conversation, central banks losing control of monetary policy, to even the application of fiscal policy through a central bank digital currency. Can you speak to that a little further?
Yeah, absolutely. So in we haven't discussed like some details of our proposal, but in our proposal, effectively anybody using this system would have like one account, like as an individual, which is linked to their ID. And same for the firms, like maybe they would have a couple of accounts, but a finite number related to their different business activities. And then the privacy is achieved by having people turning their money from the digital central bank's account into private coins, which they can which they can use without digital trace of what they have spent it on. But like the mere fact that everybody has an ID-linked account would make making transfers and subsidies to individuals or firms very easy, because imagine that like this would have been existing at the time of COVID, like the process on sending the benefits to those that qualify would have been a lot easier because of this ID-linked account.
Right, that's a whole fascinating attribute that given our pandemic experience, could have enormous benefits for society. Interesting. So, Katrin, this has been a fascinating conversation, and I appreciate your perspectives on how central bank digital currencies can improve a lot of the things that we do as consumers and as businesses. My last question to you today is really, if one of the major central banks, let's say the U.S. Federal Reserve or the European Central Bank, were to issue their central bank digital currency, how do you think that'll affect the existing cryptocurrencies like Bitcoin or Ether or others? Do you have any thoughts about that?
So I mean, I think that Ether is a somewhat different animal, because like Ether is bit used as a speculative asset as well, but it provides a lot more. I mean, it offers smart contract functionalities and possibilities for firms and individuals to build new exciting things based on it, like ranging from NFTs nowadays, earlier like ICOs and so on. So mere possibilities what one can do via an Ether platform. And if you have what we discussed before, digital records of incoming money seem very compatible. So I would think that a lot of innovations that are currently in Ethereum would integrate with the ones with central banks, digital currency very easily. Now, when it comes to purely fiat money like cryptocurrencies, like Bitcoin, then the question is exactly what is always very difficult to understand, what brings value to it. So if the central bank's digital currency is attractive enough in offering privacy, and that's one of the reasons people are using Bitcoins, and it could be a replacement. If people like the other aspects about it, then it can continue to run in parallel. So.
Right. So ultimately, this trade-off between
as for any forms of money, like especially the ones that are not guaranteed by central banks, it has value only when people expect it to have value, and Bitcoin is exactly like that. So.
Right. And so these trade-offs between privacy, between the ease of exchanging it, and store of value are all parts of this evolution from what we know, Bitcoin, for instance, into central bank currencies potentially being more attractive if they get that mix right.
Yeah, and of course, there is also the question of cooperation across countries. If only one big country would issue a central bank's digital currency, it's probably not as impactful as if many do it in some form of coordination. Yeah.
Interesting. Well, Katrin, this has been a fascinating conversation. I want to thank you for making the time for me to speak to our listeners and our audience about this issue. It's something that, as the Bank of Canada, the Model X Challenge progresses, we'll be watching closely to see how your proposal does. We're obviously keeping our fingers crossed for you and look forward to seeing the results. So once again, thank you so much for taking the time, and appreciate your thoughts today.
Yeah, thank you for having me.